Hi, welcome. My name is Lynette. I'm with AT Pros. Today we are going to go over self-employment taxes. If you're a new business, you may not know what these are, and I'm hoping that I can explain this to you. If you are an existing business, stick around in that you may learn something new. This is for specialty trades, but it can apply to any business that is in the United States. So grab a pen, grab a paper, and grab a drink, and we will get going in just a minute. Thank you. Let's jump right in. Okay, self-employment taxes, what nobody told you when you started your trade business. This is a very important topic. This is going to keep you compliant. We do not want to get behind on self-employment taxes. And hopefully this will give you a little bit of information about what it is and how to plan for it. And of course, we're always here available if you have any questions. So let's jump into it. So what is self-employment taxes? It says, when you work for yourself, you pay both sides of Social Security and Medicare, the employer portion and the employee share. I always say, think of it like you are the employee and the boss. You are self-employed, therefore you pay your half and the company pays your half. That means that you pay all of it. The same is still true even if you were a sole proprietor or a corporation. If you're a corporation, your corporation pays half of it, but it's still your business. So it's still considered a type of self-employment tax. It's just paid a little bit different. So when you work for yourself or when you work for someone else, the employer is going to be paying 7.65% on your behalf. That's 6.2% in Social Security and 1.45% in Medicare. You both pay equal portions, so it totals up to 15.3% for the year. And it's automatic. You never even realize it's being taken out of your paycheck. The employer pays his side when he files the payroll taxes. You pay your side before you even get your paycheck. Now, when you're self-employed, nobody does that for you. You are responsible for it. So there's no employer to split it with you. You pay the full 15.3%, and that is on top of your regular income tax. So if you pay federal and state taxes, you also have to pay this 15.3%. The good thing is it's always about that amount. It doesn't change too often. I probably would say that it hasn't changed in years as far as the percentage goes. The caps go up, meaning that the amount that it applies to, but the percentages are still the same. This is also due every quarter with your regular federal estimated taxes. So you have to make sure that you calculate those based on your profits for the quarter and pay those when your quarterly taxes are due. It's not just federal and state taxes. You're paying your federal, your state, your Social Security, and your Medicare. So very important that those are all calculated together so that you avoid penalties and interest. So why it matters for your trade or business. Sometimes clients are surprised that it's a bigger bill than expected. So a lot of contractors are shocked when they find out that they have $11,300 on $80,000 of net income. And that's just the self-employment tax. Then we also have, anywhere from 15 to 30% or more of federal taxes, and as well as your state taxes if you do have any. It hits every dollar that you earn on your business. So if you have a net profit of $100,000, and even if you don't have $100,000 in the bank, the profit is what makes it what's taxable. So it's really important to plan that before taking out distributions. Basically, you pay the Fed, you pay Uncle Sam, you pay the state, you put that money aside before you take any distributions. It's not taxed on the amount. I've had some clients say, well, I only took out $30,000 out of my business. The rest is sitting in the bank. It applies to your profit and loss, not your distributions. So we have to be very careful with that too and make sure we plan that properly. No withholding means no safety net, meaning that if the employer is not paying, you have to plan and save. So you have to plan for those estimates that are due before April, because if you made $100,000 and then had a $30,000, $40,000 tax liability, that could really damage your business. And let's say you went on a payment plan for that, and then you did the same thing the next year. You owe whatever that balance is plus the current year. Let's say you have a really good year and you make, double the net profit. Now you have two old balance dues plus a new one that could be, 1.5 to 2 times more. So it's really easy to find that you are falling into this hole. Don't get me wrong, the IRS does allow payment plans, but that's fine for if you had a year where there was an error versus having multiple year after year after year of the same issue of not paying in the taxes. You can drown in debt very, very fast. And these are personal taxes, not business. So you can't write them off through your business. The quarterly payments are required. I think we mentioned that in some other videos. There is a penalty and interest if they are not paid timely and in full by January 15th. Now, there is some calculations there, and I don't want to get too much into that, but if you didn't pay it in full, but you had a better year, you may be able to waive some of the penalties. But there's always interest. Interest rates right now are anywhere from, I think, 6.5% to 7% per year. So that can add up really fast. It's easier to save the money, pay the estimates on time, and not have to worry about it. My goal with my job and what I do for my clients is to make sure that my clients can sleep at night without having to worry about the tax man coming. An S corp election can help with your self-employment taxes. That is something that should be evaluated by a case-by-case scenario. We don't want to just jump into an S corp election if it doesn't make any sense. So it's something that should be discussed with your tax professional, or let me know, and I can help you with that and find out if a S corporation if it makes sense for your company. The deductions, there are deductions also that can lower what you owe: home office, tools, vehicle, health insurance. Proper deductions reduce the taxable income that your self-employment tax is based on. So making sure that you have your financials in place, your balance sheet, your profit and loss, making sure all your equipment is being depreciated properly, make sure your vehicles are accounted for and allocated to the right classifications, meaning are they just vehicles, or are they truck, or are they equipment? Those all come into it on how much self-employment tax you pay. The goal is to pay the least amount legal, but still be able to save for your own future. So now we're going to get into a situation where Carlos Plumbing LLC is a solo plumber. He had a great year. He pulled out, or he made $95,000, but no one told him about what was going to come the following year in April. He didn't plan for it. So he didn't save for any taxes all year. We kind of explained a scenario, but we're going to be going over Carlos. So he spent what he earned. He has no savings set aside. April hits and he owes $18,200 in self-employment tax. He doesn't have the money. He missed all 4 quarterly payments. He didn't know that it was required. The person that helped him in the prior year didn't know that he set up a business, and now he has $18,000 and $18,200 taxes that he owes, plus the income tax, and he owes $620 in underpayment penalties on top of that, and interest. And he missed thousands of dollars in deductions because he didn't do it correctly, and he took out a loan to pay the IRS. So he borrowed $12,000 at 18% interest to settle his tax bill. He spent the entire next year paying that off. Now that $12,000 could have been allocated to something more important, and he could have been paying that evenly, in the prior year that it was earned before he took out distributions for himself. So it kind of gets into a little bit of a cash crunch. We do not want to ever have to take out a loan to pay a tax debt, if possible, of course, especially when that $12,000 loan is now being counted against his credit and will possibly not allow him to build his business with a possible business loan or a vehicle loan. So the result, he had a great year in the field, but it was the worst April of his life. Back to square one financially. He basically has to start with the debt, the current year with the debt. So let's say that Carlos did have a plan. This is the second year. He already learned his lesson. He started working with a professional, and now he sets aside 25 to 30% of his check. Every check that he comes in, he sets aside 25 to 35 or 30%. Now, he may not owe all of that in taxes. That's just a target. So what it allows us to do is know that he has that money sitting aside if anything happens. At that time, I reviewed the financials for him on a quarterly basis. I find out that he actually only needed about 20% of that income for that quarter. So that means he already has 5 to 10% set aside either for the next quarter or he can use it for something else. He pays his quarterly on time every time. So he pays 4 quarters a year or 4 estimates every quarter for the year. And he avoids underpayment penalties and stays in good shape with the IRS. He also avoids interest, and he also does not have to get a loan. He tracks every deduction: his truck, his tools, his phone, fuel, home office. He recovered $4,800 in deductions in that second year by hiring a professional that knows his industry. And also at that point, because year 2, how is year 3 going to look? It's going to look a lot better. And if he's growing, this is the time to now start talking about an S-Corp election. The S-Corp election, there's a lot of things that we will be talking in the future in another video, but he could possibly save $3,200 in self-employment taxes annually, even if he doesn't grow. But we will talk about that in another video because there's a lot more in that. Not everybody should be an S-Corp election. I'm a little conservative. I want to make sure that they pay in what they need to pay in and focus on building their business versus just on growing in the complication. We want to try and keep it as simple as possible. So the result was he had a same great year in the field and he got thousands more of what he earned. So quick recap. Self-employment tax is 15.3. You pay both sides with no employer to share it. It applies to every dollar of net profit, cash jobs included. No plan equals massive unexpected tax bills every April. The quarterly payments are required. Missing them adds penalties. There is an underpayment penalty and interest. Deductions and business structure can legally reduce what you owe. That's something you should talk to your tax professional about once you get to that level. And a good tax pro pays for themselves, often many times over. So hiring a professional is going to help you save a lot of money because we're going to make sure that you take all your deductions, your structure is in place, and that you avoid penalties and interest in the future. So how can we help? We help you with your self-employment tax calculations. It's something that we do when we do the financials. We plan on those quarterly tax payments, making sure that you are compliant and that you do not file late. We maximize your deductions on your taxes, making sure that they're on your financials, making sure that all of those deductions are taken advantage of to save you also on taxes. The business structure review, we do recommend that at about $85,000 to $90,000 net profit a year. And going into future years, it could actually save you quite a bit of money. But there is a lot of structure and expense and everything, so we don't recommend it for small startup companies until they get established a little bit, maybe in year 2 or 3, or if they have a fantastic couple years or first year, it may be something that we discuss for the following year. We are also enrolled agents. We are licensed by the Internal Revenue Service to represent you in audits and disputes. We also assist in general liability audits as well as workers' comp audits also. And we are a year-round company. We don't just file returns. We actually work with you all throughout the year. We're here every single day of the year. We do take vacations and everything, but we are available to help our clients on a monthly basis and help them grow their business because there is no off-season when it comes to business building. The next step, so stop overpaying, start keeping more of what you earn. If you're interested, please book a free 30-minute consultation. You can find that right on our website. You can find the website link in the description, but it is atprosinc.com. You can also get a free handout. We have it in our description. It's a PDF handout. There is no obligation. It's free to you. You're more than welcome to share it or use it for yourself. You can print out multiple copies and give them out however you like. And if you have any questions either about the PDF or this video, please be sure to put it in the comment, or you're more than welcome to contact me through the website, and I will be sure to respond to you as soon as I can. Remember, we handle the finances, you handle the work. Stop overpaying, keep more of what you make. And if you found this helpful, help the channel out. We are looking for more subscribers and more people to turn on those notifications to give more information out and education to our, our professional trade contractors. So like the video, Make sure you subscribe and turn on the notifications. We will be posting 3 to 5 videos a week, at least for the remainder of the year. So please let me know if you have any suggestions for a topic that you'd like me to discuss. You can put it in the comments and I will be sure to include it in our list of upcoming events. Thank you so much, and I look forward to see you in the next video.